This meeting is being recorded.
The official start to any Zoom meeting these days, the official recording. Welcome everyone. Thank you for joining this session focused on the due diligence process from an entrepreneur's perspective. This session is hosted by myself representing the 49th State Angel Fund, as well as the Alaska Angel Conference as the 2022 organizer, and Julie Nelson, an advisor from the Alaska SBDC offices. And we wanted to share this information so that you all knew what to expect as part of the Angel Conference, but also generally speaking, for any of you that are seeking investment, how you can best prepare and position your company in a way that is favorable to investors. We will have a Q&A portion at the end of the event, but you are very welcome to ask your questions in the chat. We will be monitoring that, and also unmute or raise your hand to ask them live as well. So with that, let's get going. What is the Alaska Angel Conference for those that might have joined and haven't heard about it yet? The point of the Alaska Angel Conference is to create stronger startup companies in Alaska, developing new angel investors and helping them through the process of making a real $100,000 investment alongside new and seasoned angel investors. So there are benefits to both being a founder going through the Angel Conference as well as an investor going through the conference. Angel investing might be a funny word, but it simply means that these are investors that are coming in after you've raised capital or not even from friends and family. And before you grow to the point where you might go to a bank or a larger venture capital company, these angels are there for financial reasons, but also to mentor and help the founders through their own process in developing them. It is a risky endeavor from the investor's perspective. So if any of you are planning on investing, we do suggest that you talk to your financial investor, and none of this is considered investment advice. The Alaska Angel Conference process has a few different stages. Currently, we are recruiting both startups and angel investors. The deadline is February 11th to apply. We will then go into a 4-week pitching process where we'll select 20 startups to go through 2 rounds of pitches. The first round as feedback and Q&A from investors so that you can then go into the second round of pitches with a little more direction and refine that pitch before the investors select 6 finalist startups that will go into the due diligence process and review different deal terms and company backgrounds so that they can select one company to receive that $100,000 investment, which will be announced the night of May 18th at the final event. And in terms of timing, and we want to make sure that timing expectations are always shared, this is happening between February and May of this year. They include weekly meetings every Tuesday from 4:30 to roughly 6 p.m. or so, sometimes shorter than that. The main thing to note right now is that the application deadline is February 11th, and then we will kick off the conference February 22nd. And we'll let you know as an entrepreneur if you have been accepted or not, and usually we accept a very high rate by February 15th or so. From an entrepreneur's perspective, it's not all about that $100,000 check. There is a lot more value to the conference where you're able to meet other Alaskan entrepreneurs and meet other investors as well. So, and receive feedback about your pitch and your company, your business plan, so that you can keep growing your business beyond just the investment part. There will be a lot of time during the conference to explain this investment opportunity through pitches and Q&A. You're going to meet a lot of investors and receive feedback from them. And if you're selected as one of the 6 finalists, you'll go through the due diligence process from early April up until mid-May, so about 6 weeks or so. And that the expectation there is that you spend a couple hours a week answering questions from investors. The Angel Conference has made a big impact in the ecosystem. This is the 4th year that we host at this conference. We've raised a great amount of money for Alaskan companies through this event. There have been follow-on investments and investments that have happened in companies that did not even make it to the finalist round. There have been a lot of connections that have happened. So we're very excited to be into our 4th year. So a little bit about the application process. We use a platform called Gust to collect your information about your business, and this will dovetail into the due diligence process. These are the requirements of what we look for, as well as the optional items to apply and be prepared for the Alaska Angel Conference. A great number of the optional items are items that we might ask for later down the line, but are not required as part of the application part itself. But they are, all the optional items are very helpful in terms of the due diligence process. So the Alaska Angel Conference makes a specific type of investment. They don't make grants, they don't write loans. These are equity investments. And so what that means is that the Alaska Angel Conference is a equity or shareholder in your equity investor or shareholder in your company. So the money that is invested is expected to be repaid to the investors at some point in time. If all the assets were liquidated at that point in time, you would repay your investors. If the company is acquired or goes public, then there would be investment that goes back, or returns that are paid back to the investors at a certain rate for having that confidence in you from the beginning. And there are a couple of items that investors look at that we call due diligence process and due diligence document that we wanted to share about more today, such as the pitch deck, financial projections, a business plan, a term sheet so that the investors understand what kind of deal terms they are receiving, and then a capitalization table to understand, well, who else are the other owners and shareholders of the company. There are a couple of different types of equity investments, and I won't touch on them into more detail. We have a recording of an event that we hosted just last week that goes into much more detail, and we're available for questions. But the main ones that we see as equity investors are just straight equity. Think about a percentage of your company. Revenue redemption, where you're paying back your investment based on the revenues that your company is receiving for a certain amount of time, that then might roll into an equity stake if some amount is not repaid. Dividends, so stocks in the company, convertible debt or convertible note that looks like a loan until a certain maturity date and then becomes equity. And then SAFE or KISS agreements that are rather similar, but look at the future value of a company rather than the immediate one. So with that, I'll turn it over to Julie to talk more about these different documents and help all of you get ready for this. And for those that have joined the call, please introduce yourselves and put your company name and website in the chat so that we can all help each other out and learn more about each other. Thank you.
Great. Thanks, Melanie. Let's see if I can get my screen to show. Share screen. This is going to be it. Are we seeing a slide deck? Okay. I am going to see what happens when I do this. Is that still a slide deck?
We see their speaker view.
Okay.
And your notes.
I think
it might be the different screen that you're presenting.
I thought there was a way to switch it. In the interest of time, we may just have to, can you see the slides from there? I realize it has the frame around it, but I think we'll be okay. Welcome everyone. Thank you so much for having me. Super excited to kind of walk you through some of this information. Before we get started, I'll just tell you a little bit about the Alaska Small Business Development Center for those of you who maybe aren't familiar. I think I recognize some names in there of people who maybe work with us already, so that's great. The Alaska Small Business Development Center is a program that is funded by a grant from the SBA, as well as a grant from the state of Alaska, some other local municipality grants. We're housed at the university. We have offices throughout Alaska in all the major markets, as well as the rural market. So depending on where you're located, there's going to be an SBDC office and advisor that's available to you. The SBDC offers free one-on-one confidential business advising. So no matter where you are at in your stage of business, you can sign up for advising. You do that through our website. Sign up to work with an advisor, and that advisor is going to meet with you one-on-one, learn about your business, talk to you about, what your goals are, and try to help you navigate through some of those things. So if you aren't a client, I encourage you to sign up. In addition to the advising sessions, we also have a very robust suite of workshops that you can sign up for. Most of those are on demand. You can take them at any time. And then we have some other things like our referral program and things like that. So again, if you have any questions, I'm sure my contact information is going to be available after this. You're welcome to reach out to me directly and we can get you signed up for advising, or you can go right to our website and sign up and we'll get you assigned to an advisor. So let's talk a little bit about what we're going to go through today. This is due diligence for preparing for investment. This really also applies to just about any type of funding. So if you're looking at private investment, that's great. All of these things are going to be applicable. Most of the things will also be applicable if you're looking at, say, a small business loan, an SBA guaranteed loan. All of these things are the things that both investors and banks are going to want to see. So we're going to talk a little bit about financial projections, a little bit about the business plan narrative that goes along with that. And then I'm just going to touch on pitch decks. I know Melanie has as part of the Angel Conference, there's I think a whole thing on how to create a pitch deck, but I'll just touch on that really quickly. So the business plan really consists of two main parts: the financials, both your existing financials if you are a existing business, and your financial projections. So generally investors and banks want to see 3 years of financial projections out into the future. So if you're an existing business, you're going to start with, what am I doing today? What do my financials look like today? And then project that out into the future, generally for about 3 years. And then the narrative that goes along with that is, just going to be the written portion explaining all of those numbers. So we're going to kind of hold the financial projections up as the end all be all. That's the very most important thing to work on and focus on. The narrative really becomes an explanation of those financials. So we'll talk about those two things. So talking about financials, I mentioned the 3 years of projections. There's a few things that the financials need to include. If you're working with the SBDC, we have a very robust projection worksheet that we can help you walk through that will allow us to sort of put in what's happening today, and the model will project out for those 3 years. It'll give us the first 3 years of projections. It'll allow us to adjust the growth rate and things like that. So if you don't have a method for doing that, please reach out to us. We can help walk you through that very easily. But it really needs to include a few things. So if you are a startup, or if you are about to make an investment in your company, in terms of, let's say you're going to now buy a building, or you're investing in new equipment, or you're just getting started. The first step is to make sure that all of those startup expenses or those that investment expense is outlined. So both banks and investors want to see, if I give you money, what are you going to use it for? So when we first start the financial projections, we're going to go through what we need to either get our doors open, everything that will cover as an expense before we start operating, or everything that we're going to need the investment funds for in that sort of startup section. Operational expenses, of course, that's going to be everything we need to keep our doors open on a monthly basis. We're going to outline that for our investors and for the bank. The sales projections is where I think a lot of entrepreneurs, a lot of business owners have a little trouble, where what we tend to do is kind of have this high level, let's say, we're gonna clear $10,000 this month, and we put that $10,000 into the model, and less all our expenses, it gives us a net, and that's fine. The problem is that most investors and banks for sure want to see a very thorough breakdown of where those revenue streams are going to come from. So rather than having this sort of high level, this is what we're going to do, we have to break that down by product or service lines. So if you are a restaurant, let's say, we're actually going to go down to the level of breaking that down based on our menu. So we're going to say, if I'm a coffee shop, I'm going to go through all of the things that I offer. I'm going to put in, here's my cup of coffee that I sell for $3. It costs me $1 to make it. My gross margin on that particular product is $2. Now, how many cups of coffee am I going to sell on a monthly basis to both cover my expenses and make a profit? And that's really the level of detail that we need to get down to. So, I've had a lot of banks and investors push back on financials because they weren't showing a level of detail. Because what investors really want to know is, where is this money going to come from? And if you just say, well, we're going to do $10,000 and I'm going to sell all my widgets, that's great. But we really need to know on a very detailed basis, what are those individual service lines? So if you're a consultant, you're going to break down all of the services that you offer. If you're selling widgets, you're going to outline every single widget. What's your gross margin on that, and how many are we going to sell? Salaries and wages, again, we're going to go through. If you're an existing business, you probably have a pretty good idea of what your salaries and wages are going to look like. If you're a startup, we have to estimate some of that. Usually we do it on an hourly basis. If you are an owner-operator, then most investors, unless you have another source of income somewhere, most investors and banks for certain will want to see some money for yourself in that salaries and wages section. So, we assume that you're going to have money to live on. So depending on what your situation is, if you're running a side business and you have another job and you're not really taking a salary from your business, you can leave that out. But if you're an owner operator, you're working in the business every day, you don't have another source of income, make sure you're including yourself in those salaries and wages. And then the company financial history. So certainly investors are going to want to see what you've done to date. They're going to see those historical financials, your P&L, your balance sheet. Those are generally the two things that we're going to include. Banks will require business tax returns. So if you are approaching a bank, you'll want to make sure that you have the business's tax returns for generally the last 3 years. Overall, we just want to look at, and particularly with investors, we just want to look at what the company has done so far. So we want to be able to demonstrate what is the profitability and the cash flow of the business to date. So usually we're going to at least include the current P&L and balance sheet for whatever year prior in that. So the one thing I will say about financial, sorry, go ahead.
Real fast, for the companies that might only have been created in the last year or so, and don't have as much history, but are looking at forward what they might be looking at, how would you suggest they approach the last 3 years question?
Yeah, so it's very common when we're working with startups that we don't have those last 3 years of financials. If you're just getting started, certain investors and banks will want to see your personal tax returns. So they'll want to know about your personal financial situation, because your credit worthiness that is really going to be based on that. Anytime that you, as a business owner, if you go to get, say, an SBA guaranteed loan, you're going to have to offer a personal guarantee on that. So they're going to require those personal financial history. But really, if you're a business that's just getting started, if we're doing this for primarily just for investing, then we're really going to heavily rely on those projections. So we need to say, okay, what have we done so far? That's great. Maybe we have 6 months, maybe we have a year of financials. That's great. We definitely want to include that. But we really want to outline for investors, what are we going to do moving forward that's going to, change the narrative, and how are we going to demonstrate that in the financials? So this financial projection that we would work on, projecting out to 3 years, and this is, if you wind up working with me as an advisor, we spend so much time on the financials, because as a business owner, there is no better way to understand your business than to understand in extreme detail the financials, the metrics, the way those things are affecting your business. So if you are a coffee shop owner and I come to you and I say, how many cups of coffee do you have to sell today to pay your bills? You should know that number. And if it's 80 cups of coffee, great. So we got to sell 80 cups of coffee. So, and investors, generally will get down to a level of detail, and you need to be able to just off the cuff have these key metrics for your business. And going through this financial projection will allow you to have insight into that. I know we're going to do questions at the end, so I'll hold till then. So let's talk a little bit about the business plan narrative. So a lot of people get really overwhelmed by writing the narrative part of the business plan. And what I'll say is, don't stress out about it. I'm not going to say that investors and banks won't read every part of the business plan, but likely they won't. So really what we want to be able to do is take those financials that we just came up with and, in written form, support how we got to those numbers. A lot of people think, the business plan needs to be this epic document, a Hemingway novel, but it really should be about 15 pages, no more than 20. My suggestion when people start going through business plan, and I'm going to talk about Live Plan in a minute. That's the system that I use to help my clients create business plans. But I tell people, just get information into the sections, and then we'll go through and we'll edit it down. So when you start writing, just start pouring out the ideas into the various sections. We're going to talk about those in a second. Into those various sections, and just get the information in there. Don't overthink it. And then we can always come back and edit through that. And also don't overwrite. It's not, a lot of people try to make this really flowery business language. Just write simple, straightforward language that anybody can understand. So a couple key components of that. The executive summary, everybody probably knows what that entails, but when I say people don't read business plans, a lot of times people will open up, they're going to read your executive summary, and that may be as far as they get. For some banks these days, some banks are requesting just a one-page narrative to go with the financials, just enough information to explain what's going on. So put a lot of time in your executive summary, because that might be the only thing that somebody reads. And it should tell them everything they need to know. It should be a couple sentences that cover, mission statement, product, service, market opportunity, vision statement, all of those in a neat little paragraph. I recommend that, even though it's the first thing that comes in the business plan, I recommend that you write it last so that you get through all of your narrative, and then you can go back and sort of summarize that. But again, thinking through, does this executive summary tell my potential investor what they need to know in one page, in one paragraph? And if the answer is yes, great, you've got a great executive summary. If it's no, then we still need to keep tweaking it. So for investment, this is going to be a big portion of the business plan or of the addendums. Melanie mentioned the term sheet. The investment opportunity is going to be a really important part of the business plan, so that investors, this will certainly be a section that they read. They need to understand why should they invest with you? What are your goals? What are your funding goals? What are you going to use the funds for? So when we talked about those startup costs over on the financials, we need to again reiterate, here's what we're going to be using this money for. It's not unheard of, but it's somewhat unlikely that an investor is just going to say, here, take my $100,000 and do whatever you want with it. They want to know that you have a plan, and so that outlining what those funds are going to be used for is important. The terms, so Melanie mentioned the different types of investing. Investors need to understand, how am I going to get my money back? Am I going to, get equity in your company? Am I going to, get paid back over time? How am I going to get my money back? The key milestones. So you should have in that investment opportunity kind of what the timeline is for making those initial investments, executing any of your key strategic initiatives, and then when you'll start seeing return on that investment. And then lastly, and it sort of goes along with the terms, is what's the exit strategy? So if I'm investing money in your company, how do I get my money back? How do I get my money back and walk away if that's what I want? Because a lot of times investors, they only want to be part of the project for a while, and they want to be able to know, how am I going to be able to step away? So some other key sections, and these are just sort of standard stuff. You really want to outline who's going to do what on your team. It's important to investors to know that the people that are doing the work, that are going to be taking their money and implementing the strategic vision, know what they're doing. So, most of the time we include a resume as well as part of the business plan for the key players, like the key, management team, owners. Banks will require a resume. One of the main things that banks will immediately turn down right now is if you don't have any experience doing the thing that you want to do. So if you want to open a dog walking business and you need money for that, but you've never owned a dog walking business, that's something that has to be overcome. So make sure you're really speaking to how you and the members of your team are qualified and can execute the strategic vision. Market opportunity analysis, that's kind of standard stuff. We need to know who's our target market, where do they live, what size is it, what's the competition like, really what's the available market out there. The SBDC does have some tools that we can help you kind of pull industry information. So if you're going to start a coffee shop, we can pull industry information for coffee shops. So we can get some kind of high level information, and that needs to be included. But more importantly, we need to know who they are and how we're going to get to them. Business synopsis, such as how we're going to operate, how we're going to run our business. It's like the operating strategy. Revenue model, how we're going to make money. So when we outline all of those different revenue streams in the financial projections, then we need to, talk about those different revenue streams and how they're going to function in the business plan narrative. The timeline, that's important. We mentioned that, and that's a different timeline than the investor timeline. In the investment summary, when we talk about timeline, we're talking about when can the investor get paid back? In the business timeline, we're talking about what is the timeline for making these strategic implementations in our business. And then the marketing strategy. That when I have people create business plans just for themselves, rather, if we're not seeking funding, we're not seeking any kind of investment, I really narrow it down to executive summary, market analysis, operations, and marketing strategy. And the one thing I want to say about a business plan, and this doesn't really apply to funding, but it does apply to your business, the business plan should be a living, breathing document. And it shouldn't be something that you go and you get your funding and you then stick it in a drawer and you never look at it again. It should be reviewed at least on an annual basis so that you can look through everything that you strategized about in the beginning and say, does this still fit? Does this still work? Do we need to make changes? One of the things that I have my clients do is when we put the marketing strategy into the business plan narrative, then we take that marketing strategy and we create a marketing implementation plan. So, because everybody has great ideas that they write in their business plan about how to market their business, and then they put it in a drawer and forget everything that they thought they were going to do. So we take that marketing strategy, we put that into a timeline where we can say, okay, here's everything that we said we were going to do about our business, and it's who's going to do what by when, so that it's easily executable. So just don't forget that this is like I said, that this is a document that you want to come back to over time, that you need to make changes to, and work with your team to keep it updated. Live plan, I mentioned that earlier. So I generally have my clients sign up for an online tool called Live Plan. The SBDC has some discount codes we can give you for it. It's about $15 a month, and you can cancel it at any time. But it walks you through sort of step by step each of these sections and allows you to more easily get information in there and creates a very nice looking business plan. It's also going to take the financials that we would work on beforehand. It's going to allow you to put those financials in there, and it's going to give some summarized financials in the business plan narrative, so we can pop in growth charts and things like that. And over time, if you stay signed up for it, it has tools for continuing to manage against those goals. But I like it because it's just a really easy way to create a business plan. We used to use Word templates, and they're just messy and not very user friendly. You certainly can find tons of business plan templates online. There's thousands and thousands of them. But this is just a nice, easy way to walk through it. If you're feeling overwhelmed by starting to write your business plan, I highly recommend using Live Plan. So talk briefly about the pitch deck. Like I said, I know Melanie has more info on this for those of you that wind up being part of the conference. But just my 2 cents about pitch deck. If you've never written a pitch deck before, first of all, go look at examples. And when I say look at examples, go find your favorite startup, Facebook, Uber, any of these. Go find your favorite one, Google their pitch deck, it's going to come up, and take a look at what they look like. Because a lot of people think that a pitch deck has to outline everything about your business, every minute little detail. And generally a pitch deck is more of an emotional plea to an investor. You want to wow them, you want to cause them to feel something that makes them want to invest in your company. And a bunch of words and a bunch of numbers doesn't really make people very emotional. So, keep those simple. It's your chance to impress people. It's your chance to tell your story. a pitch deck should tell the story of your business and why it matters. And everything else, you know, can come through the business plan. It can come through the financials. They can look and see, okay, here's how the business is going to make money. The pitch deck should tell your story in a very short window. My opinion is pitch deck should never be longer than about 10 slides, and they should have far fewer words than you probably initially want to write. And then finally, you know your numbers. If you, I can't stress it enough. If you know those numbers for your business inside out, up, backwards, forwards, every which way but loose, then nothing can stump you. So if an investor asks a question, boom, you've got an answer. And that is more impressive than slides full of numbers. So just really, and when you go through the financial projection, you know, this stuff will start to come out, and you know, even things that you thought you knew about your business, you may be surprised and think, oh, I didn't really realize that. But know those numbers, know those key metrics, know what drives revenue, know what drives growth, and be able to speak to that during an investor pitch, you know, without any questions. And with that, so yeah, just as I mentioned, please reach out to the SBDC. We're here to help you. Our services are totally free. We have a vast amount of knowledge among our team. You know, most of our advisors have been business owners, myself included, and you know, we're happy to help you walk through any of these items that we just talked about. But as you're prepping, not only for the Angel Conference, but for your business as well, wherever you're at, we're happy to help you. So with that, I'll open it up to some questions.
Thank you so much, Julie. And before we go into questions real fast, I will mention that the Alaska Angel Conference's deadline to apply for startups and for investors is February 11th. And we have another informational session for entrepreneurs scheduled for February 2nd at 5 p.m. Which will be hosted by Jake Carpenter, an entrepreneur himself, out in Juneau. I will add the link in the chat. We also have open office hours that I know a few of you have already taken advantage of on Wednesday mornings after 1 Million Cups from 10 to 11 a.m. And those are open to anyone who has a question or comments or just want to sit in and listen for other people's questions. So those are very free form, and however you want to take it, we have the Zoom link on the Alaska Angel Conference website. So I will add those links in the chat. And Julie, if you want to add any links to SBDC or your contact information, we can do that as well. And with that, let's open it up to questions and comments or thoughts that might have come up from folks during the session.
And Melanie, for some reason, I'm not able to see the chat window anymore. So if somebody puts anything in the chat, maybe you could read it.
Sure thing. Do you want to stop sharing your screen, and that way we'll see everyone?
I would love to do that if I could figure out why I could. I don't know why, but all the controls disappeared and I can't get them back. You'd think after so many months of doing this, I'd be an expert, but
it always surprises me how many times I'm still on mute unexpectedly.
Right. I don't know if you're able to take the controls back.
I know. Let me see what I can do.
Sure.
Okay. In the meantime, please unmute and ask your questions or add them in the chat, and I'll ask them to Julie.
Hi, Julie. My name is Alan. I'm calling from Ketchikan. How you doing?
Good, Alan. I can actually see the controls again. That's great. Perfect.
I'm calling in, so you won't be able to see me. I got a question. I'm wondering what kind of advice you would give to an entrepreneur just starting up. doesn't have a location, already got a business plan, very rough draft, financial models are pretty solid. I'm having a very difficult time trying to find startup money. I have one family member that who can invest some, but not much. I'm looking at a considerable amount of money. In order to get a bank loan, they want 25% down. They're not willing to go 504, which is SBA. You're well aware of that. What kind of advice would you? I was trying to find out if I can go to one lender, get say $50,000, bring it back and use that as a down payment towards a bank loan.
Yeah.
I can't seem to find. I'm sure I'll eventually get it, but I can't seem to find any startup right now other than a small amount, which the bank's just not going to take. They're pretty firm. They want 25% down.
Yeah, so, a couple things. So 25% down is usually, if a bank is, sees it as high risk, that's how they overcome the risk level, is to go up to 25%. 504 or 7A, SBA guaranteed 7A loans usually fall between 10 and 20%, depending on, down. So one of the things I might recommend is, not every bank does SBA guaranteed loans. So you kind of got to shop around and find out which banks are really actively doing them. Locally, KeyBank and Northrim are probably the two banks that do the most SBA guaranteed loans. But there are other options, more sort of non-traditional lenders, like not brick and mortar banks, that are doing 504 and 7A loans. So first I'd say shop around. But I will tell you that as a startup, it can be very difficult to secure business lending. If you come to a bank and you've got 3 years of financial history, your chances of being approved are much greater than if you're coming in as a startup. That being said, it's not impossible. But if you can come up with a solid business plan, if you can come up with solid financials, if you can get in that, secure that down payment of say 10 to 20%, then with a little shopping around, it's possible we could find a bank that would do it. But that's why a lot of people initially look to private investment, because it's difficult to secure lending as a startup. So I don't know if that's helpful kind of for advising. Sorry, go ahead.
This Angel Conference is great. I'm sorry, go ahead.
Go ahead, Alan.
I was just going to state that this Angel Conference is a great platform to meet private investors.
Absolutely. And one of the things, you mentioned, can I go to a bank and get money to make a down payment on another loan? Well, theoretically, yes. The problem you're going to run into is it's really just going to depend on your personal financial situation, because it's going to increase your debt coverage ratio. And so if that pushes your debt coverage ratio too high, the bank's not going to give you the other loan. The other thing I recommend for startups, if it is a very large amount of money, then we may have to look at how can we still start this business, but scaled back and a little more bootstrap to start, and then sort of build into ourselves into a situation where we can go and ask for funding.
Gotcha. Thank you, Julia.
Hey, Julie, this is Mark. Amazing presentation. For those who might not know, could you define the term bootstrap?
Yeah, sure. Gosh, how would I define that? I mean, the pulling yourself up by the bootstraps, I think is where the origin came from. But, when we talk about bootstrapping, we're really talking about creatively and creatively starting businesses, creatively getting things off the ground without having to spend a lot of money. So, it's really more of maybe takes more of an ideation process than just going to the bank and getting money and paying for things. But there are ways to do that. I mean, I've worked with all kinds of business owners, some who come to me with lots and lots of capital, and some who come to me without a dime. And we figure it out, and I think that's what bootstrapping is just figuring it out, given the maybe even a lack of resources.
Hi, Julia. Thank you for the presentation today. Just a question about for starters. So I have a criminal history. So what does that look like when you're approaching a bank for potential funding? Do they do a background check on you? And then say, for instance, I have some holes on my resume, right? And I'm approaching a bank and I'm asking for funding. How does that go over? And then taking it one step further, the last comment there. So what happens if I'm bootstrapping my company and I can't get funding from a bank and I don't have a job right now? Does the ability to bootstrap your company prove to would-be funders, if you can get the thing off the ground, that it's something that's worth running?
Yeah, these are great questions. So let's take the first one. The short answer to your question is no, a bank's not going to look at your criminal history. If you were to owe money, like you had fines or unpaid taxes or something like that, they're going to look at that. But they're not going to look at the criminal history. And for your resume, think about the resume that you send to the bank as evidence of your experience. If you were going to apply for a job and your resume had holes in it, they might look and say, well, what were you doing during this time? Banks and investors aren't really looking at it in that way. They're looking at it to say, does this person have enough experience either in the field that they want to be in or in business in general that we feel they are qualified to run this business. So, think of the resume like that. Your last question, I think the answer is absolutely yes. If that's part of your story. So when you create that pitch deck and you're asking for funding, your story is, hey, I started this business from nothing and I bootstrapped it and I, was able to successfully get it off the ground and it's doing well. And I know it can, do better with more investment funds. So I think if that's the story of your business, that you started from nothing, lots of businesses have been started from nothing. If you started from nothing, then, tell that story. And I certainly think it's an important part. A whole lot of people wind up in business by accident. I've started businesses by accident, where you didn't even mean to. And next thing you know, you're running a functional, profitable business. And so just, keep that as part of the story and the narrative of you and of your company, especially when you're talking to people who, maybe want to lend you money.
Thank you so much.
Oh.
And I'd add on that from an angel investor perspective, it's all about the founder's story and how they got to where they are today. So especially with early on investments, early stage investments, you're investing in that founder. This might not be the business, the initial one that you're presenting that ends up being the successful one. But once you have that entrepreneurial bug in that you're a founder, you might go on to create other companies, and those investors, angel investors, will have that that connection with you and support you to continue in your career.
Absolutely. I noticed in the chat that somebody was asking about those live plan discount codes. So I am going to put those in the chat for everyone as soon as I can find them. While I'm looking for that, does anyone have any last minute questions?
This might be a little.
I got one. Hi, this is Alan, just real quick. Is your advisor in Southeast Alaska, is that Ian?
Yes. Yep. Ian runs the Juneau Center. So if you're down in Southeast, you'd be assigned to his center.
Gotcha. I got his contact number. I've been working with him already. That's the only question I had. Somebody else was trying to ask something.
Great.
Yeah, I was going to ask kind of an off the wall question. So if I'm working, say for instance, if you were opening a restaurant, and you needed liability insurance for some off the wall reason, I don't know if small businesses are required to have some form of liability insurance in order to, complete this due diligence phase. Could you, I guess, roughly outline how a business that might need liability insurance or workman's comp insurance or occupational accidental insurance might go about getting that before going through the due diligence phase?
Yeah, good question. So in general, most businesses should have some form of liability insurance just to protect yourself. If you are set up as an LLC, you have the liability protections of the LLC, against your personal assets. If you're a sole prop, you do not. But if you, in general, I always recommend it. Now, some types of industries require liability insurance. If you're going to go into construction, if you're going to do landscaping, those are specialty licenses, business licenses that you have to get through the state, and they require a certain amount of liability insurance. And in order to get liability insurance, I have a list of, I can put it in the chat too. I have a list of service providers that's got a local insurance agents on it. You can just call them up and get a quote. And then as far as workman's comp goes, if you are going to hire employees, and you have payrolled employees, then yes, you will also have to have workman's comp insurance. Most of that, like all of the workman's comp, the regulations regarding employees, that's all, you can read all of that through the state website. But I mean, if you're at home making, I don't know, headbands or something, maybe you don't need liability insurance. But if you have a brick and mortar place, if you are offering any kind of services to people, just think about the risk level of your business and all the ways that somebody could sue you or somebody could get hurt. And, whatever that is, if you're doing massages out of your home and somebody trips and falls on your front step, that's your responsibility. So you just have to, think about what is the risk level of my business. And I will put that referral list. It's on our website in our list of tools, but I'll put a link to it in the chat also. There we go. Any other questions?
I'll mention that one of the things I was very excited about today's event is that Alaska SBDC has a number of resources to help entrepreneurs or folks that are thinking about being an entrepreneur. And so thank you again, Julie, for agreeing to do this. I can't recommend the advisors and their resources enough. And for anyone that has worked with me, I often send folks to the SBDC. So I'm just so excited to partner. Yaso, you have a question?
Hey, Melanie and Julie, nice to meet you here, and thanks for the presentation. So I have a question about angel investing, particularly in your experience in all of the angel investing that's been going on currently. And I would like to know how how many years are the angels willing to wait in general? And I know Julie's presentation talked about, the focus is for them, the most optimal exit strategy, right? So the quicker, the better for the angels. But it also presents a challenge for the entrepreneur to get to that point. So on average, I mean, maybe you could give me a range, but generally, what do you see the local investors' waiting time has been, your experience here?
I see that Mark might want to jump in. I'll give the quick answer. It really depends. And it also depends on the entrepreneur or the investor's portfolio construction. If they've made some long-term investments already, they might be looking for those quicker returns right away. Different angel investors have different risk appetites as well. The Angel Conference Fund is created for 10 years. So that's when we expect those returns for the Alaska Angel Conference Fund. But overall, it really depends. Mark, did you want to add on?
Yeah, sure. So I've had quite a bit of experience with angel investors. I think it's useful to split it into 3 categories. So usually a startup, the first investors that come in is usually called kind of the friends and family round. It's going to be people who maybe aren't professional investors, but they know you or they like the idea. Those people usually don't have a lot of experience with investing. And so part of that process may be actually educating them on how long a return usually takes, because they may be expecting that they put in some money today and they may actually see a return sooner than they probably will, because generally speaking, an exit's not going to happen for quite some time. And then you have professional angel investors, or people who angel invest all the time. They're usually going to be looking at somewhere between an 8 to 12-year horizon. And then when you actually get into venture capital, they're going to usually be looking at a 5 to 10-year horizon as a hard cap, because the way venture capital works is the people who manage it, called the general partners or the managing partners, will raise a fund from people who give them money to invest on their behalf, called limited partners. And those fund terms are almost always 10 years, which means that they have to return the money. Their goal is to return the capital back to their limited partners before the end of 10 years. Otherwise, there's messy things where they have to try to like divvy out the shares. So the answer to your question depends on which of those groups you're raising money from. But the short answer is most investors are going to be looking at they're going to be looking in the long term. They're going to be looking at like a 10-year horizon usually.
That's good. That's way longer than I had imagined it to be. So thank you.
Yeah, absolutely.
Yeah, I think that's right. That's very helpful, Mark. The one thing I want to add is it does depend too on the type of investment. So if they're taking, a percentage of your company, then, that's more than likely a longer term strategy for them. If they're basically just making you a loan, then that's going to have some clearly defined terms. You're going to be paying on that just like you would a bank loan, and it's going to got to be paid back at a specific time. So I think it really depends, and you as a entrepreneur have to decide which of those scenarios you're comfortable with too. I think a lot of times entrepreneurs forget that they get to decide who invests in their company and what those terms are going to be. A lot of my business owners, they want to take funding. They're happy to take on debt, but they don't want to give away part of their company, or vice versa. So really deciding for yourself what you're comfortable with, I think is important.
Thank you.
Thank you all very much. And now that the clock has struck noon, we'll call this meeting. But thank you very much, Julie, for joining us, and for everyone on this call. We do have an event, another entrepreneur-focused event about the Angel Conference next Wednesday at 5 p.m. Hope to see some of you there, and hope to see some of your applications for the Alaska Angel Conference coming through our pipeline. And with that, have a great day, everyone.
Thanks, everybody. Really appreciate it. Have a great day.
Care. Great presentation. Melanie, I got a quick question for you.